Welcome to Hull and Estate and Succession Planning, a series of podcasts hosted by Ian Hull and Suzanna popvic-montag. The podcast you are listening to will provide information and insights into estate planning in Canada. From the offices of Hull in Toronto, here are Ian and Suzanna.
Hi, and welcome to Hull and Estate and Succession Planning. You're listening to episode 169 of our podcast on Tuesday, June 23rd, 2009. Hi there, Ian.
Hi, Susanna.
I guess you're a movie star now.
Oh, I'm in Hollywood. Actually, just got back from Vegas, not quite Hollywood, but I was at the NHL Awards, which was quite fun, and so as a result, we've been a little tardy in getting this podcast out, but we're here and we're ready to go. And I was also, the week before that, a couple weeks ago, I was on BNN Money Talk, so that was fun.
And it was a wonderful job that you had done.
Well, thank you, but it's a great program and really enjoyed being there. So today we wanted to talk about what?
We're going to talk about, Ian, something that I think is quite timely now that we're into the month of June, and that is the family cottage property.
Terrific. Well, it is very timely, and although this will be put on the internet quickly, it may not be seen by everyone on the same day, but this is supposed to be one of the hottest days of the summer, and it's only June. So that's nice to know, and so the lakes are warming up. And not that it's shameless self-promotion because we give it away for free, but we have a brochure on the family cottage. We call it Plan Ahead, Keep Your Vacation Property in the Family. And it can be found on our webpage to be downloaded, or if you need any hard copies of it, we have them available, and you can contact Suzanna popvic-montag at Hull & Hull in that regard. But I think it's a great topic, and it's one that is worthy of a timely discussion, but also one that is worthy of a couple of really sort of in-depth analysis on what we're suggesting in our brochure. It's a meaty brochure, and it's done that way for a reason, because we're trying to not just say, let's be happy and nice about the transition of the family cottage, but let's talk about specific, tangible ways of making it happen.
And that's exactly right, Ian, because we do know that just like any property that belongs to someone, there is, especially with a family cottage, an emotional element to it that might even surpass reason in a lot of circumstances. And we've seen that with many clients, and when people fight over the cottage property or who's entitled to use of it or who's going to be responsible for maintaining it, a lot of those discussions aren't always rationally based.
Absolutely. And although the podcast that we want to talk today is not going to focus heavily on the need for discussion because we have really canvassed that out, we want to talk about some of the specifics. And as you say, I mean, the long-standing status of a family cottage used to the pleasure and enjoyment during the lifetime is something that needs an extra effort to pass on to the next generation. And one of the discussions that we often and we encourage our clients to have is get some basic tax advice to before you even really get into a heavy discussion with your heirs and who you're going to pass it on to get a handle on just what you're looking at in terms of the fundamentals. And in Canada, the fundamental tax hit is, of course, the deemed disposition capital gain hit.
And that, of course, Ian, is important because it's one of those that could possibly come as a surprise at the end of the day. If a property's been in the family for a really long time, if it's in a relatively nice area, it could suddenly have a tremendous appreciation that was completely unexpected by the person who's leaving it to someone in his family.
And we've seen a lot of different skilled sort of techniques, and in our brochure, I won't call it a pamphlet because it is a brochure in that sense, we talk about the need to really assess the capital gains. And we have a specific example right in the brochure. Talks about a sale price at $600,000, the adjusted cost base, which is the price that you paid for it, at $80,000, and then the illustration shows a $520,000 capital gain. What are we going to do about that? Now, you don't owe $520,000. Fortunately, the government of Canada isn't at the point where they're taxing all of the money we make, but you are at this point susceptible to a significant capital gains tax on that $520,000. We say roughly 25%. It's a give or take scenario, and the number changes from day to day depending on how bad our debt is. But if you're looking at paying 25% of that capital gain, how are we going to fund it, and what kind of funding mechanisms can we do? And really what we tend to say to our clients is that, first of all, we don't have the expertise. Really, this is where you need to call on your allied professionals, because It is really, it's not about paying tax, it's about managing the tax issue. And managing the tax issue is far deeper and more complicated than simply just saying, okay, well, I know I got to pay it, and flipping it out and suggesting, well, a mechanism. You need to analyze where it's going to come from.
That's right. And when. So
Yes,
that's another
yeah.
thing, that when you're talking with these allied professionals, you want to see, is this something that you should be transferring now? Is it something that you should be transferring on your death? Is it something that you should be putting into a trust arrangement? And all of those different scenarios will have different tax consequences, and that's something that you'll also want to explore with your professionals.
I think it's a really good point, and I think, without getting overly complicated, what happens is sometimes the family cottage is, for example, it's held maybe not personally, maybe it's held in a corporation or it's held in a trust, and we forget to ask our allied professionals, what is the next step? What's going to happen if you, and the classic scenario in Canada, in Ontario, is that we have this primary and secondary will scenarios, and if the family cottage is held in a corporation, what kind of impact is there going to be if we're going to draw some money from, say, the primary estate or from the secondary estate to fund the tax liability? What is the secondary impact? It's not just how much money do I have available to pay, but what real money do I have available to pay?
That's right.
And, there's and accountants talk about double accounting entries and so on and so forth. And if we take some money from one pool to another pool, are we going to leave a liability in another pool? Are we going to create a secondary tax impact? Those kinds of things need to be thought through. And I say to our clients, look, we don't have the tax expertise, but we can tell you that if your cottage property is owned other than personally, there will be some significant complexities as to how to fund it. Not just, and we talk about buying an insurance policy or something like that, but it's going to be the accounting entries that will impact on the tax entries, which will impact on the ultimate result. So you may think, well, I've got lots of after-tax dollars to pay that money with, maybe an insurance policy or something like that, but when you're going to flow it through corporations and so forth, if you don't go to that next level of talking to an allied professional, and you just take, for example, sole advice from an insurance advisor, which is good advice, and that is buy the policy, and you don't go to that next level and say to your tax advisors, how is it going to be funded, and is this the most efficient way, and they don't talk, all of a sudden we've created a pool of money that's going to be taxed, and therefore it's not enough to pay the tax liability. So you can see the ripple effect, and I think really when I address the whole impact of passing on the wealth, there's nothing more powerful than passing on a tax-free wealth. But what does tax-free mean? And what does that mean to our clients? That means talking to an insurance advisor, cross-checking it with a tax advisor, and cross-checking it with your lawyer.
And that really is key, Ian, because we've seen certainly in the past situations where people try to give away things that they may not even own. And if you've got a corporation that owns, for instance, the family cottage for whatever reason, and you're saying, well, I give my family cottage away, the question becomes at the end of the day, well, can you do that? And how do you effectively do that? And by getting the advice during the lifetime and coordinating the professionals, you'll make sure that you do that as best as you possibly can.
And so, coming back to it, at the end of the day, really it comes down to manage the tax issue. And if we can manage the tax issue efficiently, we're going to manage the emotional issue.
That's right.
And that is not solve it, but we'll manage it. And when you're talking about distribution of a tax-paid asset as opposed to a tax-burdened asset, you've eliminated a layer. Now, again, it's kind of nice to talk about it. Some people may not have the facilities to do this and so on, but again, life insurance can be a modest solution in terms of it's almost like you're putting a lease on your life, and you're going to pay over time. It's not such a big lump sum, and savings exactly is another option as well. All right, so we've talked a little bit about the sort of the starting point, and that is, how do we manage the emotional? First thing, we manage the tax issue. The next thing I want to talk about is some other specific tools that we can use in the management of the tax issue, and then work ourselves through some of the other aspects of what we've identified is our brochure. So thank you very much for today, Suzanna, and thank you for everyone for joining.
Thanks to you too, Ian.
You have been listening to Hull and Estate and Succession Planning by Ian Hull and Suzanna Popvic-Montag. The podcast that you've been listening to has provided an information service. It is a summary of current issues in estates and estate planning. It is not legal advice, and you're reminded to always speak with a legal professional regarding your specific circumstance. To listen to other Hull and Hull podcasts or leave any questions or comments, please visit our website at hullestatemediation.com.